Okay guys, so welcome to my YouTube channel. My name is Napa and I've been investing in property for nearly 10 years now. And on this video here, I'll give you a guide on how you can start investing in buy to let. So if you're new to this channel here, make sure you press the subscribe button, like this video, so you know it helps the channel to grow more. As we mentioned in this video here, so it's a beginner's guide to buy to let investment in the UK. Let's just discuss, let's have a brief conversation. What is buy to let? So buy to let is essentially you buying a property and making a rental income from that property. So essentially you're going to put down a 25% deposit on the property and then you're going to make rental income on that property. So some people say, yeah, buy to let is dead, buy to let doesn't work. Since I've been in this property industry, I've heard multiple times people saying that buy to let doesn't work, it's dead. But when you look into the bigger picture, when you look into the grand scheme of things, most property investors, especially your big fish, right? If you look at them and then you ask them where they make most of the money from, let's exclude the training, things like that. A lot of them tend to have a heavy portfolio on single let properties because, one of the main reasons is easy to manage, it's pretty passive compared to other property investment strategies, and then is also very stable when you compare to other strategies. So when people say, yeah, buy to let is dead, buy to let is this, you hear it so many times, but it depends what you're looking for. What is your end goal? What is your end value that you're looking to achieve investing in properties? So if you're looking for something that is more stable, that's going to bring you a regular income, it will be less stressful, and then pretty much as passive it could get, then I'll strongly recommend looking into the buy to let. But on the con side of things, right now in this market, the interest rate is pretty high. So the interest rate being pretty high, that can also affect your rental income or your net profit. In some areas, the rents are going up, so it's kind of compensating. So when you start looking for your deal, you just got to do your due diligence, better in order for you to get a deal that you really after. Another question is, where should you invest? Where should you buy your property? When I started investing in property, my mentor's mentor was like, Napa, you need to invest within 30 miles of where you live or 30 minutes of where you live. So I'm like, bro, I live in Islington, what can you really invest in Islington that will give you adequate return for a buy to let? Unless you're doing HMOs, service accommodation, flips, you can get, maybe a good return in that area. But for a single let, even a rent rate could be difficult because the rents are super high. So it didn't really make numerical sense. So what I've done, I went to a different area in South London to start my rental business. But when you're looking to start in an area, forget how far the area is, because at the end of the day, you're not looking to create another job for yourself. You're looking to create an investment, and in order for you to achieve that, you need to build a team within that area that you're going to invest in. So you need to look at your supply and demand. You need to look at the rental income that you can achieve in that area. You need to look at the property prices that you can get, so you can get the better yields, the better return of investment. If you're doing your rent to rent, similar thing. So you actually need to start looking at your area, what you need to do in order for you to achieve the results that you want. And one thing you also got to bear in mind, there's not a direct correlation between a property price and rental income. You can come across a property where it's like super expensive. It doesn't mean it will be super expensive on the rental in compared to other properties. So you want to find a property that is pretty much on a lower price scale and you can rent it higher. So you want to buy pretty cheap and rent high so you can make a good margin in between. You need to start looking as well, okay, who can you leverage in that area that will help you grow your business or manage your business? I.e., we want to look at property management, letting agents, estate agents that you can build a closer relationship with, so you can kind of grow your rental portfolio. So once you find your area, you know your location, you know the infrastructures, you know your management, you know your pricing, you know your supply and demand, and then you also want to start looking at the regulation, what's going on within that area in terms of regulation. Do they have any selective licensing? Is there any Article 4? So for example, where I invest, there's selective licensing, so which means it costs me £500 per property in order for me to rent it as a buy to let. So I need to apply through the council to get to get an approved license in order for me to rent my property. Again, that also have to factor in within your numbers when you're doing your due diligence. So when you're looking at your areas, those are the things that you need to put into place. The licensing, the EPC. Again, that was a big question. Right now, as long as your properties are within the D category for the EPC, you can rent your property out. But with the new regulation that was coming into place, it has to be a minimum of a C grade in order for you to rent your property. So when you start looking at your property, even though right now they're saying that, the government has abolished that plan, but you still kind of want to be in the borderline just in case they bring it back or they change their mind. So looking into the EPC can be a greater thing that when you're looking at your property, make sure you can either improve it, which can also be good for your tenants for their energy efficiency when you're renting out your property. Before buying the property, you also want to get it surveyed. So make sure there is no structural defects on your property. Because if you buy a property, it has a structural defect. Number one, it could be harder for you to get a mortgage, especially if you're buying a cash, so you never had a third party to look into it. So it could be harder for you to get a mortgage. And then even when you're looking to refinance it, if you bought a cash, it will be harder for you to also refinance. And then some of the structural defects can be very expensive to fix. So you want to make sure once you're buying your property, you get the property surveyed, and then you work out your figures, you make sure your figures make sense, and then you put your offer through. Then that will be your first buy-to-let property. If you've got any value from this video here, make sure you press the subscribe button. If you've got any question, put on the comment, I'll get back to you. And then if you like it, please share, comment and subscribe. It helps the channel to grow so we can give you more value. And thank you for watching.